Good afternoon. This is Sean Golding with Golding and Golding. Today we're going to discuss a little bit about going offshore for U.S. tax purposes. And the reason why this is so important is because we're finding that unsuspecting taxpayers do not realize that they have to give up their U.S. citizenship in order to derive most of the benefits. So either they've paid some of these companies hundreds of thousands of dollars before they realize they have to give up their citizenship and it's not something they really want to do, or they're halfway and they've already paid and now they decide just to go forward with it because people make it sound like it's easy to get it back and to get back to the U.S., but that's not always the case. So we want to use a case study to kind of explain. This is not based on any one specific individual person. So when you are a U.S. citizen, an American, you are taxed on your worldwide income by the United States. It does not matter if you live in the U.S. or abroad. It does not matter if the income is sourced in the U.S. or sourced overseas. You may have foreign tax credits. You may qualify for the foreign earned income exclusion. From a baseline perspective, the U.S. taxes your income. Obviously, people want to pay less tax, right? No one wants to pay more tax. And typically, we found people that fall into these categories, entrepreneurs, people who have been, hustling hard for years, and suddenly they go from not making much money to making a significant amount of money, and they leapfrog all the different deductions and exclusions. And so they're service companies, there's just not that many deductions they can take, so they're paying a lot of tax federally, depending on what state, and they're paying a significant amount of state tax as well. So they're researching, figuring out what they can do about it, and they might find themselves going down the offshore rabbit hole. Companies, they target Americans, and they make it sound like, hey, all you have to do is pay us a large sum of money, and we can put together this incredible double secret plan that attorneys and tax professionals don't really know about, and we can get you overseas. You're no longer subject to U.S. tax on your worldwide income. You could pay zero tax possibly, and it sounds great. And the question is it real? And the answer is 99% of the time it's not real, and taxpayers find themselves out a lot of money and potentially their citizenship. And so let's kind of go through an example so you can understand what to be careful of and what to watch out for in case you're considering going offshore for tax purposes. Okay, so John is an entrepreneur. He has his own service business. He's tried other businesses in the past, but this one really worked out. John's making a lot of money. John now finds himself in the highest tax bracket. John doesn't want to pay the highest amount of tax. He looks up deductions. He doesn't really qualify for much of anything. It's a service company. He doesn't have that many expenses. It's just his creativity that people are paying for. So he goes online, he does some research, falls in the rabbit hole, and reaches out to some of these companies claiming that they can get him zero tax. So the first thing to remember is, who are these companies, right? Is it a U.S. company where you could find them in the United States? Are they registered with one of the secretaries of state? Do they have a location in the United States? If not, that doesn't mean you can't use the company, but then you have to be a bit cautious, and can you find them if something goes wrong? Where are they really located at? Do you know their real names? Do you know their real locations? Do you know who you're dealing with? Next is the fee, and what are you getting in the fee? So, if you're paying someone a couple $100 for a consultation and they're going to give you a lowdown, it turns out it doesn't work out the way you want. It stinks, but you're out a few $100, right? If you're paying some of these companies $50, $75, $100, $200,000 to put together some magical plan for you, it's really important to go over what you get, what they're going to do, what service they're going to provide, who you're going to be dealing with, what countries you're going to end up in, and have them explain how you're going to result in a zero tax, what forms you need to file, and again, what's included in the fee. People have come to us, for example, and they're like, oh, I paid a company $100,000, $200,000. It didn't include anything. It didn't include the legal, because they're not legal professionals. It didn't include the tax. It's not tax professionals. It does include the golden visa fee. That's totally separate. So it's important to get all of that before you decide if you're going to go forward. Once you decide to go forward, if that's what you're going to do, you have to realize how to derive the benefits of going offshore. Realizing if you're not using an attorney and you're not using a tax professional, then who are you using and how do you justify the fee? Buying a golden visa is not a ticket to having zero tax liability. If you're an American, you're taxed on your worldwide income. It's citizenship-based taxation, not residence-based taxation. Doesn't matter where you live, doesn't matter where the income is earned. In other words, you have to formally expatriate from the United States to derive that benefit. Now, the problem with expatriating is that for high net worth individuals, there's typically going to be an exit tax, and that exit tax can be significant. So first, even if there's some pot of gold at the end of the rainbow by going overseas, how much exit tax have you had to pay in order to get the benefit of not being a U.S. person? And are you really going to live this no tax lifestyle? Okay? Because most of the time, even after you expatriate, you're going to want to invest back in the United States. And as a non-resident alien, you're paying 30% tax on the income. If it's a non-treaty country, there's no reduction in withholding. Another thing to consider is a lot of taxpayers, Americans who are considering these programs, they've never lived offshore. So yeah, you're watching videos and seeing pictures online of like this great lifestyle where you're living on the beach in this great loft and you work a little bit and you make a lot of money, you don't pay any tax, but that's not typically the way it goes. So if you're even considering this, it's important that you live overseas for a significant amount of time to decide if it's even something that you like. Now, when you're deciding to go overseas, there's a lag time because to get the golden visas and then to, assuming you're going to expatriate, because there's literally no purpose in getting a citizenship-based visa if you're not, or passport visa, if you're not going to go live overseas and give up your U.S. citizenship. What's the purpose then, right? If it's just for travel purposes, you would just get a residence by investment visa. Those typically will have the same benefits without some of the same issues. So you get the golden visa, you apply for it, and then you have to expatriate. That could take a year, 2 years, 3 years, depending on which country you're going to expatriate from, how backed up consulate embassies are for you to renounce, holidays, cancellations, all of that stuff, right? So during the time period where you're applying for the golden visa and you're actually expatriating, you have to acquire different investments in the country you want to obtain citizenship so that you can gain citizenship. It's required. Oftentimes, you'll have to invest in various types of funds or bonds and things like that. So now you're going to have to report all of this information that you're hoping to keep secret to the U.S. government, because part of the sales pitch, right, is that like you're going to have all these foreign assets in offshore countries and no one's ever going to find it. But you have to file taxes in the meantime. You're not going to commit fraud and not include the foreign income in the foreign assets because that's just going to set you up for more problems. So realize if you're doing it to avoid transparency, you're actually increasing the transparency by doing that. And another thing is, now that you have these foreign assets, companies, trusts, right, to protect your assets, well, you need companies and lawyers and tax professionals overseas to protect them and to file the forms, and that costs a lot of money, right? These companies, they don't provide the service because they're not attorneys. They're not tax professionals, so they refer you out. Maybe they get a referral fee, who knows? But they're going to refer you out to other people, and you're going to be paying more fees. And you're going to be paying higher taxes. Why? Because certain types of passive investments and foreign companies and trusts, there's different tax liabilities. There's PFICs and CFCs, and what would be a lower tax bracket if you operated the same business in the United States, it's going to be a higher tax bracket because it's overseas while you're a U.S. person. And quite honestly, many people will start the process and not finish the process because now that they've come out of the rabbit hole and they've done some different research, they realize, yeah, this really isn't my cup of tea. I like having my U.S. citizenship. Sure, I'd want to pay less tax, but does that mean I want the hassle of trying to get back in the United States? Yeah, you can still apply for visas and things like that, but now you are no longer a U.S. citizen. So they're going to ask that the problem comes in working with immigration attorneys is when you start to apply for the visa again, they ask where you're born. Well, you're born in the U.S. Well, aren't you an American citizen? Well, I gave up my citizenship, and it becomes a whole hassle and a whole headache. So what to keep in mind? If you are considering going offshore for tax purposes primarily, then it is important that you consult with tax attorneys and tax accountants in the specific country you want to go to. And you should do the research and the due diligence yourself so you know that you found someone that's going to be impartial, right? You want someone where you did the research, you pay them some money, and they give you the lay of the land. Most of the time, if you're working with an attorney or a tax professional, they're not just going to explain it through rose-colored glasses, right? They're going to give you the pros and the cons instead of getting you all psyched up with the pros and not explaining the cons. One final thought. A lot of people decide they want to go overseas because they're concerned that they haven't been doing everything right on the way up, right? They haven't been filing their taxes the right way. They haven't been reporting their income, their foreign income, their accounts and assets. Just realize that there are various programs the IRS provides for where you can get into compliance, whether you're willful or non-willful. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.